Hi, this is Brant from tradeguild.blogspot.com, and it is the 13th of November, and I'm going to do a quick video. I hope it's going to be quick. A lot happened in the market today, but I don't really have much to say about it, so hopefully it'll be quick. So here's Walmart, and Walmart was up a little better than 6%. Walmart came out with strong Q3 earnings before the bell, and presumably that's the catalyst that got things kicked off on this oversold bounce that we got today. So what is actually going on here? I mean, it was a really strong day. Let's pull up the S&P 500. Strong day in terms of price appreciation. Here's the S&P 500, up almost 3% there. This is a short covering rally. It's huge, and counter trend rallies are always like this. They always suck people in. They make you believe that the new bull market is starting, that you don't want to be left behind, and that just adds more fuel to the fire when things reverse and go back down. Look at this volume over here. The blue line over here is a 60-day average. I mean, it's barely above the 60-day average, and it's nothing like the volume that we saw in August, where the index just moved vigorously off those lows on good volume. So we're not seeing anything like that. Does that mean this move's over? No, it doesn't. But there's pretty good zone of resistance right in here. So I don't see it going up too much more. But what do I know? But I do truly, truly believe that this is just a short covering rally. And the volume, I think, is evidence of that. When news was coming out, they were hitting it, and it's not the behavior of professionals, it's the behavior of laymen. And I think a lot of people are probably going to see what happened today in the market when they get home. And they're going to place their orders, and they're going to maybe gap the market up, and they're going to suck those people in, and it's going to be a bull trap, in my opinion. So that's what I think's happening. Home Depot, I think before the bell, misses on their earnings. They say they see earnings per share from continuing operations declining approximately 11% on a 52-week basis. They say in Q3 the company experienced negative sales growth in all their departments except kitchens, and they still got to rally with the rest of the market today. So mostly all short covering, I would say. Let's see, what else do we have today? The pending home sales report came out I think about 30 minutes before the close, and that gave us that last little bump over in this area right here. And look at the volume over in here. So that's what we got there, and there was just a series of reports that came out. JP Morgan came out and I said something along the lines of that they don't have too much exposure to CDOs and all that, but there's more wrong with this market than than meets the eye. You really have to dig into it. It's a macroeconomic event. It's not just do you have exposure to subprime or not. It's all the little things that create that chain reaction connected to it. So we had the better than expected pending home sales. Oil was down 8% from last Wednesday's highs. So here's X oil. Oil stocks still get to rally. There's OIH up almost 3%. And notice too that it's coming into a zone of resistance here. This little type of head and shoulders type pattern over here, but it's coming into a zone of resistance. And all these indexes are coming into some pretty serious resistance. So I really, really don't expect that this is going to carry too much further. Maybe a few more days. I would think. Maybe tomorrow, who knows. S&P 500. Let's take a look at the next resistance on the S&P 500. I'm going to pull up an hourly chart here. And basically, our next resistance is going to come into play around... Let me zoom in a little tighter for us there. Next resistance should come into play around 1482, right in this area. And then I would say the next level is going to be right up here around 1490, 1489. So right here, 1482, then 1490, because we already took out this level right here. So the next is right in this area. Let's take a look at the spiders, and the reason why I want to look at the spiders is I have more indicators I can use for some reason on the spiders than I can on the S&P 500. But you know, here's what it's going to take to create a primary bear market. Okay, we're in an intermediate downtrend right now. If we take out the closing of the August lows, we're going to enter into a primary bear market. We're already into an intermediate. So, you know, don't be fooled by these counter trend rallies. And, you know, it's the same thing every time. Counter trend rallies suck people in. They make everybody believe that, you know, I mean, we're getting shorts to cover. You know, that's the bottom line. And the professionals, the locals are unloading positions. So, you know, be careful with this. Be careful. So anyway, spiders. Let's take a look at some indicators. But a little head and shoulders pattern here on the 30-minute chart. You know, necklines in here. So resistance is going to be up in this area. We have a little ways to go there, and this actually is part of a larger pattern, and you can see it over here. Boom, 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 and the little one we were just looking at was over in here, the right side of this shoulder. So it's a larger pattern there. But you know, it's going to have to contend with all of this overhead supply. A lot of people that are trapped in this area in here, that, you know how it is. You get into a position, you start losing money, and you know, it comes back to you, and you say, you know, if it just gets back to where I bought it, I'm going to sell it and get out. And that's what creates supply and overhead resistance, and that's why these patterns are top patterns. So let's take a look at some indicators here. Here's 3C. I'm going to show you a 30-minute version. Now, some of you, if you read the tag board, you probably heard me saying the other day, I talk about 3C a lot and little intraday moves that are happening. And I said there's some intraday things that looked very bearish the last couple of days, and you know, I was playing those in SKF. But I also said that the longer term 3C charts, intraday 3C charts, the half an hour, the hour, 15 minutes, stuff like that, are starting to look bullish, at least for a bounce. And here's what I was talking about. You see, here's a negative divergence right in here. We're coming down off those highs. We didn't make a higher high here, so it's a negative divergence. Over here, we pretty much have equality. That's not a big deal, no problem. We get the move up here, and then you can see we start making lower lows, and we don't get those same lower lows in 3C. So that's presumably net accumulation that's going on down there at those lows. But also notice that today's move didn't come anywhere close to the highs that we were seeing back here in this base in the indicator. So again, I don't think there's a lot of accumulation going on here. I think it's just short covering.